and welcome back to another video. This time I'm going to talk about equity ETFs, also known as stock ETFs, because, well, that's what they are. They are an exchange-traded fund, or ETF, that is made up of different stocks. And just to clear this up right away, the term equity in the context of investing refers to stocks. Similarly, when we talk about bonds, we often refer to them as fixed income. That's why you may hear people use the terms stocks and bonds or equities and fixed income interchangeably, but they mean the same thing. Stocks are equities and bonds are fixed income. However, you may have heard the term equity used in a different context. For example, owning equity in your home. Equity in the broader sense means owning an interest in a company or property or other type of valuable asset. But for this video, we're just talking about stocks. Now, before we get going, I want to say a big thank you to today's video sponsor, BMO ETFs. Not only have they so graciously been sponsoring my cross-Canada book tour for my book, Everything But Money, but I've also been partnering with them on videos for years because guess what? I like them. They are a Canadian company that has always been at the forefront of investing education with their free resources available on etfmarketinsights.com, as well as their ETF Market Insights YouTube channel, which I'll link to in the description of this video. You should really subscribe. It's great. But they also have over 22% of the Canadian ETF market share and are Canada's second largest ETF provider. Okay, so like I mentioned at the top of this video, an equity ETF is simply an ETF composed of different stocks, usually concentrated in one region. For example, let's take a look at the BMO S&P/TSX Capped Composite Index ETF ZCN. Taking a look under the hood, you can see that inside it is a variety of Canadian stocks in different sectors like energy, financials, and information technology that are listed on the S&P/TSX Capped Composite Index, which is an index that measures the broad Canadian stock market. And although I've talked about indexes in previous videos, as a reminder, an index is simply a measurement of the performance of a basket of securities that aims to replicate a specific market, like the Canadian stock market. So if you were building an investment portfolio and wanted to invest in the entire Canadian stock market or close to it, you would try to find an ETF that's designed to replicate the composition of, say, the S&P/TSX Capped Composite Index like ZCN. Now, I love talking about index ETFs because I'm a passive investor, which means that I invest solely in index ETFs. I want to invest in the entire world, as many companies as possible, so I've built a portfolio that includes a Canadian index equity ETF, a US index equity ETF, an international index equity ETF, and an emerging markets index equity ETF. This is one of the simplest ways to invest in a diversified portfolio, but there are so many other types of equity ETFs outside of index ETFs. In fact, BMO ETFs has about 139 different equity ETFs to choose from. For some examples, we've got the BMO Equal Weight Utilities Index ETF, ZUT. This is a more niche ETF compared to an index ETF because it only invests in Canadian utility companies. Or there's the BMO Japan Index ETF, ZJPN. This ETF only invests in large and mid-cap companies in Japan. Or there's the BMO Clean Energy Index ETF, ZCLN, which only invests in clean energy-focused companies globally. Then there are certain ETFs with specific goals, like the BMO Canadian Dividend ETF, ZDV. It's designed to provide investors with more dividends compared to a Canadian index ETF because it only invests in Canadian companies that issue dividends. So you won't find Canadian companies like Shopify or Aritzia in that ETF because those companies don't pay dividends. There's also covered call ETFs like the BMO Covered Call Canadian Banks ETF, ZWB. Not only does this ETF only invest in Canadian banks, but it's also designed to earn call option premiums as well. So it's best suited for an investor looking to earn higher cash flow compared to other equity ETFs because it's not only earning dividends, but also those call option premiums. And there are equity ETFs that are hedged to the Canadian dollar. For example, the the BMO S&P 500 hedged to CAD index ETF, ZUE, is an equity ETF that invests in U.S. companies listed on the S&P 500 index. The biggest difference between this ETF and the similarly named BMO S&P 500 index ETF, ZSP, is that ZUE is hedged to the Canadian dollar. What this means is that the ETF implements strategies like holding currency forward contracts that provide a payout if the exchange rate moves against the investor. In other words, the returns on a CAD hedged ETF would be less influenced by negative or positive currency movements compared to an unhedged ETF. Speaking of investing in US equity ETFs, I feel like I need to say something. Not too long ago, I made a video on how to build a diversified portfolio and why that's so important when looking to invest long-term and to mitigate risk. Make sure to watch that video after this, but for some of the key points, I believe that a properly diversified portfolio should be part stocks and part bonds, depending on your investor profile. And within those two asset classes, I make sure I'm investing in different regions like Canada, the US, and international markets. Now, over the past few months, because of the growing concern over tariffs, I've been getting a ton of questions from people about what they should do with their investment portfolios. Specifically, I've been asked, should I divest out of my US stock ETFs? And should I double down on my Canadian stock ETFs to show more support for my home country? Here's why my answer is no. First, let's talk about Canada. Have you heard of the term home country bias? Well, it's the tendency for equity investors to invest too heavily in their home country stocks compared to foreign stocks. This can create an imbalance in your portfolio, which poses added investment risk. But it could also mean you are missing out on opportunities in other markets. Considering Canada only makes up 3% of the global stock market, I don't believe it makes much sense to pour all of your money into only Canadian stocks and ignore other countries who have a bigger market share. With that said, I completely understand your feelings about investing in the US right now. There is a lot of uncertainty and emotions involved at the moment, but there are better ways to show your support for Canada, in my opinion. This can include supporting Canadian businesses at the grocery store or when buying pretty much anything you use or consume. But it could also mean taking a good look at who you are paying your investment fees to. You see, when you own an ETF, you have to pay a management expense ratio, MER. For example, if you invested in ZSP, which I mentioned earlier, you'd be paying 0.09% on that fund annually. So if you owned $10,000 worth of ZSP, you'd be paying $9 annually to hold that fund. That money goes to the ETF provider, BMO ETFs, which uses that money to pay for operating costs. But if you bought ETFs from another big ETF provider, which is likely an American company, your fees would effectively be supporting a US business instead of a Canadian business. Now, I make it a point to never tell anyone how to invest. My job is to educate, provide examples, and ultimately leave it up to you to decide what makes the most sense for you. But, for example, if you're just starting to invest and aren't sure which ETF provider to choose, or if you just don't feel comfortable giving your money to a US ETF provider, then this might be a good opportunity to take a look at your options and consider going with a Canadian ETF provider instead. One last point I want to make, although things are a bit unsettled right now, which is the nicest way to put it, remember it won't always be like this. And when it comes to investing, you've got to think long term. There have been countless financial crises, and it feels like every year we're saying we're living in uncertain times. And time again, we are resilient and rebound. Remember the impact the pandemic had on the stock market in 2020? If you stuck with your investment plan and thought long term with your investments, then you're likely to be in a better position now financially than 5 years ago. So, I don't recommend doing anything rash. Well, I hope you found this video insightful and you now have a better understanding of equity ETFs. A big thank you again to BMO ETFs for sponsoring this video. Make sure to check them out at etfmarketinsights.com and their ETF Market Insights YouTube channel, which has some really great resources to help you become a more informed and confident investor. If you have any questions or comments, please leave them below. And also, if you're not already following following me on Instagram, please do at Jessica I. Morehouse. And while you're at it, make sure to grab a copy of my now best-selling book, Everything But Money: The Hidden Barriers Between You and Financial Freedom. There's a really great chapter. It's very timely. There's a really great chapter on human behavior getting in the way of being a smart investor. It might be just what you need to stay focused on your goals and, well, not freak out. Thanks again for watching, and I'll see you next time.